Senator Warner's recognized.
Well, thank you, Mr. Chairman. The challenge of coming a bit late, you kind of asked my question, but Chairman, great to see you again. I'm going to at least ask a variation on my of the same question I think a number of members have asked. And I know a lot of us are sometimes get the advantage of being Monday morning quarterbacks on how you navigate through monetary policy. I think you've generally done a pretty good job. I'm very grateful that you're on a pause. I hope that pause, as the data comes through, continues. But we definitely have some stresses with that monetary policy. Secondly, you were doing what, again, I think people on both sides of the aisle have called for in terms of quantitative tightening. And again, that doesn't have the immediate effect that the monetary policy has. But as we've discussed, and I think Senator Haggerty raised, we also have, the appropriate review that Vice Chair or Barr for Supervision is doing on capital standards. And I think Senator Haggard and my staff told me even used the term I was going to use, perfect storm of these three all coming together.
I borrowed your term from yesterday and properly acknowledged Senator Warner.
I'll call it very stressful situation. And I understand, I think you pointed out to my friend from Tennessee, the capital requirements will phase in, but you could have all three of these events come together. I think you've addressed this already, but I just want to add my voice to that concern. Safety and soundness, you got a lot of jobs, safety and soundness, inflation control, and full employment. That full employment piece could be affected by this potential perfect storm. And again, I hope all of your colleagues, I raised this with the other members, the nominees for the Fed yesterday, and I hope you will, and again, I think you've been asked in the House, you've been asked here. I don't know if you've got anything else you want to add to what you've already responded on that, but.
I'll just say you're right. We're thinking very much about that. Fortunately, it's been orderly. The shrinkage of the balance sheet has been quite orderly. There's still a very, very high level of cash reserves in the system, and we don't think they'll be scarce anytime soon. We think the refilling of the Treasury General account, people have been focused on that for a couple of months. So far, early days, that seems to be going well. We're watching it very carefully.
But again, and it's easy to sometimes sit up here and attack rather than manage all three of these, but there could be this moment in time where these factors all come together that could have a really negative effect on the economy. Let me move to something I think that's not been raised. I have huge concerns. We've all litigated back and forth causation on SVB, but one of the things that happens when you get $40+ billion coming out of an institution in 6 hours, driven by an internet-based run, that is, I don't know what regulatory framework prevents that. And while I was glad that the SEC Chair Gensler put out a commentary that's saying, we do need to take a look on more transparency on short selling. We're not, we've found in the past short selling bars themselves don't prevent some of this. One of the things that a New York Fed official mentioned is how do we get rid of the stigma of a bank going, to the window. I mean, the thing is, rather than Fed being lender always of last resort, if we have that liquidity window, it's available. Banks are reluctant to use it, but in an era where people can move capital so quickly, having that liquidity tool available and not taking a huge amount of hits for using it would seem to me to be something that could at least take on this question of these internet-driven runs, which so far I've not heard from anybody on either sides of the aisle a really good suggestion, including I've thrown out a lot of suggestions that frankly, after upon reflection, I'm not sure make that much sense. But this liquidity tool of using the window, the Fed discount window, is there a way to think about getting rid of the stigma? And maybe we as policymakers ought to make that point as well. But could you address that?
Well, it's critically important that people be able to use and willing to use the discount window and also the bank term funding facility, other facilities that we set up, and that they aren't marked down by the markets for doing that. And so,
or marked down by the regulators or the examiners.
yeah. But the concern is that markets will see this, and so I would say the first thing is do no harm, and that is the Dodd-Frank provided disclosure of names and things like that at a quicker pace. That's one of the reasons banks don't want to do this, is they know their name's coming. Just don't. I wouldn't bring that. I think whenever you look at changing that disclosure around use of these facilities or that, you should really consider that you're going to make the stigma worse. I actually think it's good that banks have been willing to use the discount window and the new facility during this crisis, and it's almost like the stigma is a little bit less than it was. I want to think that anyway.
Thanks, Senator. Senator